Hi, Rosanna. Well, let's start with oil prices, which are under pressure in Asia trade. This comes after we saw oil actually rising around 7% in the overnight session after Saudi Arabia, the UAE and Kuwait all pledged to cut production. Saudi Arabia leading the charge with a 1 million barrel cut, and also its leadership calling on the OPEC group to extend those production cuts recently announced until after June. That next meeting is coming up on the 10th of June, so all eyes on that date to see what OPEC does next. But perhaps just some momentum coming out of the market with prices coming off their most recent highs in the US session. Meanwhile, we're also following the reaction to Saudi ARAMCO'S earnings. It's the last big oil company to release Q1 results. And despite the fact that we saw profit falling around 25% in the first quarter, this was a result that ultimately still outperformed its peers. Saudi Aramco's net profit for Q1 coming in at $16.7 billion. That's down from $22.2 billion during the same period last year. First quarter free cash flow came in at $15 billion, which was less than the dividend of $18.75 billion in the quarter, meaning Aramco is probably going to have to raise debt to cover that payout and keep to its $75 billion payout pledge this year. The company said that the COVID-19 crisis is unlike anything the world has experienced in recent history, and we're adapting to a highly complex and rapidly changing business environment. It said, looking ahead to the remainder of 2020, we expect the impact of the COVID-19 pandemic on global energy demand and oil prices to weigh on our earnings. Aramco said it would scale back on some planned investments. It also didn't give us any new information on the planned acquisition of SABIC, other than to say that it is still on track and is likely to be completed in Q2. Rosanna, the other interesting aspect here was that Saudi Aramco decided to skip its Q1 conference call. The executive has also not decided to give any Western media interviews this time around, and also journalists weren't invited to that shareholder meeting before the earnings release. So that's raised some issues around governance. But apart from that, an otherwise decent result in a very challenging time for the markets, Anvia.
That indeed is the case. Dan, I do want to follow up and ask you about the EIA's report on energy demand. What are they saying about how bad is it going to look and when things can look up or pick up from here?
Well, the future is going to look very different indeed, Tanvir. If you have a look at the latest forecast from the EIA, they have made some significant revisions. First of all, they say that global oil demand is set to contract by more than 8 million barrels per day this year because of the coronavirus pandemic. No real surprises there. But it also said that the bulk of the impact is going to be felt in the future, likely in the second quarter, but then picking up in 2021. It also said that supply is likely to fall at a faster pace. But I wanted to pull out this quote for you, and I think this is particularly interesting. Take a look at this. Linda Capuano at the EIA saying the possibility of lasting behavioural changes to transportation and oil consumption patterns present considerable uncertainty to the increase in liquid fuels consumption, even with a significant increase in GDP. And isn't that fascinating? Basically, the EIA is saying, look, things will bounce back, but they're going to look very, very different to how they were. Coronavirus essentially hitting fast forward on society's transition to a post-office economy, and that's going to spell big changes to life as we know it. This was also alluded to by Bernard Looney, who's the new CEO of BP. He did an interview with the Financial Times, and get this, he said, I don't think we know how this is going to play out. He said, I certainly don't know. Could it be peak oil? Possibly. Possibly. I would not write that off. That coming from the chief executive of BP. Uncertain times, guys. Back over to you.